trading account, profit and loss, balance sheet CAFT, 3 statements, 1 complete financial picture.
Watch the full video now. Hey, every entry, every step explained perfectly for you.
So we'll discuss the final accounts of Mr. Arun Kumar for the year ending 31st March 2008. So if you see the question, so buildings is given, furniture, opening stock, advertisement expenses, salaries, wages, purchases, discount, bad debts, interest on loan, return inwards, debtors. And if you see the credit side of trial balance, capital, sales, bank loan, interest, commission, creditors, and you can find the adjustments also. So from this information we are going to prepare final accounts. So generally final accounts means preparation of trading account, profit and loss account, and the balance sheet. So first we'll have a discussion on preparation of trading and profit and loss account of Mr. Arun Kumar for the year ending 31st March 2008. So first we'll have a discussion on this. Now first we'll see the pro forma. Pro forma is very important for your examination point of view. In accountancy, every problem will be having its own pro forma. So whenever you are doing accounts, you need to follow this particular pro forma. So now we are going to discuss the trading and profit and loss account of Mr. Arun Kumar, and this is a pro forma for this. DRCR, right? Heading should be trading and profit and loss account of name of the person of Mr. Arun Kumar. So generally we will be preparing trading and profit and loss account for a particular period. In this particular problem we will be recording all those transactions which takes place during the period. So that's why we need to end the heading with for the year ending. Trading and profit and loss account of Mr. Arun Kumar for the year ending for the year ending 31st March 2008. For the year ending 31st March 2008. So this is a heading, this is a pro forma. So we are going to discuss the preparation of trading and profit and loss account of Mr. Arun Kumar for the year ending 31st March 2008. So first we'll start with preparation of trading account. Now if you see the pro forma, debit, credit, and the heading of this particular problem. Next, particulars, amount, particulars, amount. So always in 99% of the problems trading account starts with opening stock, and this particular opening stock will come in the debit side. Now if you see the problem, opening stock is given in the debit side of your trial balance. You can see opening stock 25,000, that is on 1st April 2007 you can find a opening stock of rupees 25,000. So always trading account starts with opening stock in the debit side of trading account. Okay, so first we should try to opening stock, to opening stock. So the value of opening stock is 25,000. Value of opening stock is 25,000. After opening stock we will be writing purchases. First we will see whether purchase is given in your problem or not. Now you can find purchases, that is 1,90,000. Purchase value is 1,90,000. So after opening stock, we will be writing purchases. 2 purchases. So the value of purchase is 1,90,000. So always when you are writing the entry for the purchases, first write that particular value in the inner column of your problem. Inner column is nothing but this thing. In inner column you need to write the amount. So the value of purchase is 1,90,000. Generally from purchases we will be deducting purchase returns, and we can also say this particular purchase returns as return outward. Purchase returns can also be known as return outward. Always these purchase returns should be deducted from the purchases. Now we will see whether purchase returns is given or return outward is given in this problem or not. Now if you see the problem in the credit side of your trial balance, normally purchase returns will be given in the credit side of your trial balance. Now if you, in this case, you don't find any purchase returns, so you need to search this particular purchase returns or return outward in the credit side of your trial balance. But in this particular trial balance of Mr. Arun Kumar, you don't find any purchases, so your purchase is 0. So that's why what we'll be doing, minus P are nothing but purchase returns. You don't find any purchase returns, so that's why you will be writing it as nil. Purchase returns is nil, so your total gross purchase is, net purchase is 1,90,000. Once again I will repeat this particular transaction. Purchases will come in the debit side of your trading account. So whenever purchase is given, that comes in the debit side of your trading account. Always you need to record purchases in the inner column, because definitely you will be having an adjustment regarding this particular purchases. So we wrote 1,90,000 in the inner column. From this 1,90,000 we need to deduct purchase returns. Purchase returns can also be known as return outward, and this particular purchase return and return outward you will be finding in the credit side of your trial balance. But in this particular problem you don't find any purchase returns, so that's why you recorded purchase returns as nil. So 1,99,000 minus 0 is nothing but your net purchases is 1,90,000. This is about the purchases. And if you see the other item in the trial balance, you can find wages also. You can find wages also. So you can find the wages value is 3,000. So you will be writing 2 wages. So before writing the amount, first you need to see whether is there any adjustment regarding this particular wages in the adjustments. Now you may find an adjustment regarding the wages in the adjustments, that is wages outstanding of rupees 1,000. You can find wages outstanding of rupees 1,000. So outstanding wages means the expenses which is incurred but you didn't pay the amount. Expenses which are incurred but you didn't pay the amount, all these expenses are considered as outstanding wages. So whenever you are recording the transactions in the trading account or profit and loss account, for every transaction you need to search for the adjustments. Now in this case also you find this particular wages in the trial balance, and you can find an adjustment regarding the wages in the adjustments. So the value of wages which is given in the trial balance is 3,000 rupees. First you need to write this particular 3,000 in the inner column of your trading account. The wages 3,000, and already we discussed that there is a adjustment regarding the wages, that is outstanding wages. So this particular outstanding wages you will be finding in the adjustment side. The outstanding wages value is 1,000. So to this wages you will be adding outstanding wages. Outstanding wages, the value of outstanding wages is 1,000, then the total net wages 3,000 plus outstanding wages 1,000, total is 4,000 rupees. So this is an entry regarding wages. Now if you see the other transactions, So building won't come, furniture won't come, opening stock will not already we considered this particular opening stock. Advertisement come in the profit and loss account. Salaries also come in the profit and loss account. Wages we already considered. And next purchases, already we considered these particular purchases. Next item is discount. Discount always comes in the profit and loss account. Bad debts, bad debt will also come in the profit and loss account. Interest on loan, it also come in the profit and loss account. Return inward, this is something which related to sales. We'll discuss the credit side. And debtor also comes in the balance sheet. And if you see the credit side of the trial balance, first item is capital. So capital is something which is related to owner. So that's why it will come in the balance sheet. Next item in the credit side of your trial balance is sales. So this particular sales should be taken in the credit side of your trial balance. So buy, we need to write it as buy sales, and in this case also you need to write this particular sales value in the inner column only, because there is a chance of getting an adjustment regarding this particular sales. Okay, so that's why we will be recording the sales value in the inner column. So you can find the sales value is 2,65,000. Sales value is 2,65,000. From this sales we will be deducting sales returns. From this sales we will be deducting sales returns. So this particular sales returns can also be known as return inward. This particular sales returns can also be known as return inward, and you can find this particular sales returns and return inward in the debit side of your trial balance. This particular sales return or return inward you will be finding in the debit side of your trial balance. So you can find the return inward value is 10,000. Once again we will discuss. Sales will come in the credit side of your trading account. From this sales value you should deduct sales returns or return inward, and this particular return inward or sales returns you will be finding in the debit side of your trial balance, that is 10,000 rupees. So minus sales returns, already I said sales returns can also be known as return inward. So the return inward value is 10,000. So from 2,65,000 we will be deducting 10,000. Net amount you will be getting is 2,55,000. From sales we deducted sales returns and the net amount is 2,55,000. After this particular sales, next item which comes in the credit side of your trading account is closing stock, and you will be finding this particular closing stock in the adjustments. Now in this problem also closing stock is given. Stock on 31st March 2008, that is 35,000. So this particular stock on 31st March 2008 is considered as closing stock, and it will come in the credit side of your trading account. So buy closing stock, buy closing stock, and if you want you can write the date which is given in the adjustment, that is 31st March 2008. You can write as 31st March 2008. The value of closing stock is 35,000. Value of closing stock is 35,000, and we will see is there any other adjustments given in the adjustment side. So these are the entries which come in the debit and credit side of your trading account. Now we need to balance this. Whenever you are balancing, first you need to see which side is having the maximum total. Now in this case credit side is having the maximum total, that is 2,55,000, that is net sales, and 35,000, that is closing stock. So 2,55,000 plus 35,000 you will be getting 2,90,000. How we got 2,90,000? 2,55,000 plus 35,000, your amount is 2,90,000, and same amount you will be writing in the debit side also, 2,90,000. 2,90,000. From this 2,90,000, you will be deducting the items which we wrote in the debit side of your trading account. That is, from 2,90,000, you will be deducting 25,000, 1,90,000 and 4,000. 2,90,000 minus 25 minus 1,90,000 minus 4,000, you will be getting a difference of 71,000. And this particular 71,000, we need to consider it as gross profit. To gross profit. Okay. Total credits of trading account minus total debits of trading account, the difference is considered as gross profit. The difference is considered as gross profit. In this case, the gross profit value is 71,000. So this is trading account, and you need to continue this particular problem for preparing the profit and loss account also. You will be carrying this particular gross profit, that is 71,000, to the profit and loss account. How to carry that? So you will be writing by gross profit, that is 71,000. That is 71,000 is the gross profit. From this, your profit and loss account will start. So the gross profit already we carried, that is by gross profit, and your gross profit is 71,000. Your gross profit is 71,000. So the other item which come in the profit and loss account is, you can see the advertisement expenses. Advertisement expenses 5,000. So whenever you are preparing the profit and loss account, especially when you are writing the debit side of profit and loss account, you need to see only debit side of trial balance and the adjustments. When you are going for the credit side of profit and loss account, you need to see the credit side of trial balance and the adjustments. You should not see credit side when you are going with the debit side, and you should not see debit side when you are going with the credit side. That is a simple formula you need to remember for preparing this profit and loss account or trading account also. So first we will consider the debit side of the trial balance, because we are preparing the debit side of the profit and loss account. So if you see the debit side of your trial balance, the first item is advertisement expenses, that is 5,000. Advertisement expenses 5,000, and you can see the adjustment regarding this. So in the adjustment, it is given that advertisement expenses paid for 1 year, that is, it is from July 2007 to June 2008. Advertisement expenses given in the trial balance is 5,000, and you can find the adjustment also. What is the adjustment? You paid the advertisement expenses for 1 year, but that 1 year starts with July 2007 to June 2008. But in this problem, you are closing the books of accounts on 31st March 2008, but you paid for June 2008. You paid till June 2008, means April, May and June. These are the 3 months which you paid in advance. See, normally when you are preparing this profit and loss account, you need to consider only those transactions which are related to that particular period only. You need to record only those transactions which comes from 1st April 2007 to 31st March 2008. Only those transactions should be recorded in this particular profit and loss account. But in this case, that particular 5,000 of advertisement expenses includes the amount which you paid for till June 2008, means you paid 3 months advertisement expenses in advance. So now we'll see how this particular adjustment will affect. So first you will be writing to advertisement expenses. Advertisement expenses is 5,000. From this, what you will be doing is, you will be deducting the advertisement expenses which you paid in advance. So how much advance you paid? Normally you paid the advertisement expenses for April 2008, May 2008 and June 2008. So 5,000 into 3 by 12. Why we wrote this 5,000 into 3 by 12 means total advertisement expenses given in the trial balance is 5,000, and it is given that this particular 5,000 is for complete 1 year, and it is also given that 1 year means July 2007 to June 2008. So but your accounts closes on 31st March 2008. So the April month of April 2008, May 2008 and June 2008, these are the months which comes in the next financial year. So that's why the expenses which you paid for these particular 3 months should be deducted from the amount given in the trial balance. So amount given in the trial balance is 5,000. From this you will be deducting the 3 months amount. So 5,000 into 3 divided by 12, you will be getting 1250. 5,000 into 3 divided by 12. Why we wrote 3? Because April, May, June, these are the 3 months which comes in the next financial year. So that's why the expenses which you paid for these 3 months should be deducted from this particular advertisement. So if you deduct 1250 from 5,000, you will be getting a net amount of 3,750. This is considered as net advertisement expenses. Once again, we'll have a brief discussion regarding this. Advertisement expenses given in the trial balance is 5,000. So adjustment, it is given that total advertisement expense is for 1 year, that starts with July, ends with June 2008. So April month, May month, June and June 2008, these 3 months are the months which comes in the next financial year. So that's why the expenses which you paid for these 3 months should be deducted. So that's why 5,000 minus 1250, you got a net amount of 3,750. This is about advertisement expenses. If you see the other item, that is salaries is given, that is 14,000. Salaries is given 14,000, and you need to see the adjustment, whether is there any adjustment regarding the salaries. So you can find that no adjustments in this particular salaries. So that's why you will be writing the total salaries amount in the outer column, that is 2 salaries. That is the salaries amount is 14,000. Whenever you are writing, whenever you are preparing the profit and loss account, particularly when you are preparing the debit side of the profit and loss account, you need to see the debit side of trial balance. In the same way, the same time you should see the adjustments also. But in this case, salaries is given in the debit side of the trial balance, but you don't find any adjustment. So that's why you directly wrote this particular 14,000 in the outer column. Okay, this is about the salaries. And after salaries, next item is wages. Already we considered these wages in the trading account. Purchases we considered in the trading account. Discount. A discount of 4,000 is given in the debit side of your trial balance. So if a discount is given in the debit side, you need to assume it as discount allowed. If the same discount is given in the credit side, you need to assume it as discount received. Now in this case, discount is given in the debit side of the trial balance, that is 4,000. So discount given in the debit side should be considered as discount allowed, and this particular discount allowed will come in the debit side of your profit and loss account. You will be writing to discount, and the amount of discount is 4,000. Next item is bad debts. This particular bad debts is very important while preparing your profit and loss account. Generally, bad debts means the amount which we cannot recover. The amount which we cannot recover from our trade debtors should be considered as bad debts. So this particular bad debts is nothing but a loss. So this loss will come in the debit side of profit and loss account. Bad debts is nothing but amount which we cannot recover from your trade debtors. So we will be assuming it as a loss. So that's why we are showing it in the debit side of your profit and loss account. So first we will see whether is there any adjustment regarding the bad debts. Now you may see the second adjustment, that is make a provision of 5% on debtors towards doubtful debts. This is also an item, this is also an adjustment, something which is related to bad debts. So first we'll write an entry regarding the bad debts, that is two bad debts. The amount of bad debts is 2000 rupees. And already we discussed that there is an adjustment regarding this bad debt, that is make a provision of 5% on debtors towards doubtful debts. Make a provision of 5% on debtors towards doubtful debts means, normally if you see the concepts of accounting, you can find an important concept, that is conservatism concept. What this particular conservatism concept says that if you feel that you are going to face a loss in future period, then you need to assume that particular loss and you should show in the current financial statements. In the same way, there is a provision for doubtful debt. Provision for doubtful debt means what you will be doing, generally you will be making a provision to meet the future bad debts. Now in this case also there is a provision of 5%. So the provision for bad debts which is given in the adjustments, if a provision for bad debts is given in the adjustments, that will come in the debit side of your profit and loss account. In this problem also provision for bad debts is given in the adjustments, so that's why we are considering that provision for bad debts in the debit side. So you will be writing to provision for bad debts. To provision for bad debts. So this particular provision for bad debts should be calculated on debtors value, and you can find these debtors in the debit side of the trial balance. The value of debtors is 30,000. So you need to calculate 5% on 30,000. So 30,000 into 5 by 100, you will be getting a provision for bad debts of 1500. And if you see the other item given in the problem, given in the debit side of the trial balance, that is interest on loan. Interest on loan is 6000. So this is also very important adjustment. So whenever interest on loan is given in the trial balance debit side, we need to see the credit side of the trial balance. You will be finding a loan item in the credit side of the trial balance. So in this problem also you can find a bank loan at the rate of 10% of rupees 1 lakh. What does it mean? You took a loan of 1 lakh from the bank and you are paying an interest of 10% per annum. So on 1 lakh 10% means every year you will be paying an interest of 10,000. Now in this problem you can find that interest on loan is only 6,000. Generally you borrowed 1 lakh and you are paying 10% as interest on that amount, so it comes to 10,000 rupees. But only 6,000 is given as interest on loan in the debit side of trial balance. So how we need to see this is, first you need to write to interest on loan. To interest on loan. Now what does it mean? Means how much amount is due by you to the banker. That is very important. Now in this case you are due for 10,000 to the banker. How we got the 10,000? You borrowed 1 lakh. On that 1 lakh every year you will be paying 10% as interest. So it comes around 10,000 rupees. So every year you should pay 10,000 rupees to the banker, but only 6,000 is showing in the debit side of the trial balance. So that's why how we need to write is interest on loan 6,000 plus outstanding interest. Outstanding interest. So outstanding interest is nothing but the difference between the amount which you are payable minus the amount which is given in the debit side of trial balance. That is, every year you should pay 10,000 rupees, but only 6,000 is given. The difference amount is 4,000. And you will be writing 10,000 in the amount column. This is about interest on loan. So you can find the large adjustment, that is provide 5% depreciation on building and 10% depreciation on furniture. So you will be writing these two items in the debit side. First, to depreciation on buildings. To depreciation on buildings, you can find the value of building is 2,80,000. Value of building is 2,80,000. So 2,80,000 into depreciation on building is 5%. So into depreciation on building is 5%. So 2,80,000 into 5 by 100, you will be getting an amount of 14,000. You will be getting an amount of 14,000. Next depreciation is on furniture. So furniture should be depreciated at the rate of 10%. So to depreciation on furniture. To depreciation on furniture, the value of furniture is 60,000. Value of furniture is 60,000. So 60,000 into on that you will be calculating at the rate of 10%, and the amount will be 6,000. Amount will be 6,000. And these are the items which come in the debit side of your profit and loss account. Now we'll see the credit side, whether is there any items which comes in the profit and loss account. Capital, balance sheet, sales already we considered, bank loan, balance sheet, interest nothing but already we calculated. That commission is given, that is 6,000 rupees. Commission is given, that is 6,000 rupees. And we'll see is there any adjustment regarding this commission. So you can find that no adjustments for this commission. So commission nothing but if commission is given in the credit side of trial balance, you need to assume it as commission received. If the same commission is given in the debit side of trial balance, you should consider it as commission paid and come in the debit side of profit and loss account. But in this case, commission is given in the credit side of your trial balance. So whenever commission is given in the credit side of trial balance, you need to assume it as commission received, and it will come in the credit side of your profit and loss account. So by commission, why I am saying this particular commission as commission received, because it is given in the credit side of your trial balance. So the commission amount is 6,000. So the commission amount is 6,000. Now once again just we'll see whether is there any other item will comes in. So we considered all the amounts. So these are the items which comes in the debit side and the credit side of your profit and loss account. In the same way as your trading account, first we need to see which side is having the maximum amount. In this case also your credit side is having maximum amount, that is credit side of your profit and loss account is 71,000 plus 6,000, it is 77,000. From this 77,000 you will be deducting salaries, advertisement expenses, bad debts, and interest on loan, depreciation on furniture, depreciation on buildings. So from this 77,000 we will be deducting all those items which we debited in the profit and loss account. So the difference amount, the total credits of your profit and loss account minus total debits of your profit and loss account, you will be getting a difference amount of 21,750. How we got this particular 21,750? We deducted total debits minus total credits of your profit and loss account, and you are saying that particular difference as net profit. So to net profit. So this is a trading and profit and loss account of Mr. Arun Kumar for the year ending 31st March 2008. So now we'll discuss the balance sheet of Mr. Arun Kumar. So first we'll see the pro forma of Mr. Arun Kumar, pro forma of balance sheet of Mr. Arun Kumar. So balance sheet will be like this. Balance sheet of Mr. Arun Kumar. This is very important. See, for the trading and profit and loss account, you wrote it as for the year ending. Why you wrote for the year ending? Because trading and profit and loss account consists of all those transactions which are effected during that particular period. But if you come to this particular balance sheet, you will be preparing the balance sheet on a particular date. Trading and profit and loss account is for a particular period, but you will be preparing this balance sheet for a particular period, for a particular date. So that's why when you are writing the heading of the balance sheet of Mr. Arun Kumar as on 31st March 2008. Balance sheet of Mr. Arun Kumar as on 31st March 2008. So first liabilities amount, assets amount. So first we'll see the liability side of the balance sheet. So liability side of the balance sheet, generally we'll start with capital. So you can find that capital in the credit side of your trial balance, that is 2,50,000. See, normally when you are preparing the liability side of the balance sheet, you need to see the credit side of the trial balance. So you can find capital in the credit side of the trial balance. The capital value is 2,50,000. First we will be writing capital 2,50,000. Capital 2,50,000. For this capital you will be adding net profit. For this capital you will be adding net profit. Net profit is nothing but the amount which you got in the profit and loss account. The amount which you got in the profit and loss account is nothing but net profit. That particular net profit we will be adding to the capital. So the net profit value is 21,000. Net profit value is 21,750. So that 21,750 we will be adding to this. 2,50,000 plus 21,750, you will be getting an amount of 2,71,750. 2,71,750. Generally what you will be doing is, from this amount you will be deducting the drawings. From this amount you will be deducting the drawings, and you can find these drawings in the debit side of the trial balance. But in this problem you don't find any drawings, so that's why simply minus drawings, take it as nil. Total amount is 2,71,750. Drawings is nothing but the amount which is withdrawn by the owner of a business for his personal requirements. If any amount is withdrawn by the owner for his personal requirements, we will be considering it as a drawings. Generally you will be finding these drawings in the debit side of the trial balance, and that particular amount will be deducting from this the capital value. But in this case you don't find any drawings, so that's why you took these drawings as nil. Capital, we added net profit to the capital, we got 2,71,750. There is no drawing, so that's why you wrote nil, and the net capital is 2,71,750. And if you see the other item comes in the liability side of the balance sheet, that is creditors is given, and the other one is bank loan is also given. Bank loan is a liability and we need to take it in the liability side of your balance sheet. So we will be writing bank loan. Bank loan amount, just write bank loan given in the problem is 1 lakh. Bank loan given in the credit side of your trial balance is 1 lakh. And when you are preparing this particular net profit, that is profit and loss account, we got 4,000 as outstanding interest. So that particular 4,000 outstanding interest we will be adding to this bank loan. So plus outstanding interest. Outstanding interest. How we got outstanding interest? Already the total interest payable is 10,000. How 10,000? 1 lakh into 10%, you will be getting 10,000. But only 6,000 is given in the debit side of the trial balance. So 10,000 minus 6,000, you got a difference of 4,000. And you consider that particular 4,000 as outstanding interest, and you are adding that outstanding interest to the bank loan. Okay, so that is 4,000. Then the total bank loan amount will be 1,04,000. Now what does it mean? You should pay a principal amount of 1 lakh. In addition to that, you should pay an interest of 4,000 also. And other item come in the liability side of the balance sheet is creditors. You can find that creditors in the credit side of the trial balance. Creditors, that is the amount of creditors is 8,000 rupees. Amount of creditors is 8,000 rupees. Now we will see the adjustments also for preparing this. So first adjustment is stock will take in the asset side, and make a provision we will be considering in the asset side. You may find the third adjustment, that is outstanding wages of rupees 1,000. Outstanding wages of rupees 1,000. So outstanding expenses should be considered as a liability. In this case also you may find an outstanding wages of rupees 1,000, and you need to consider this in the liability side. So you will be writing outstanding wages. Outstanding wages 1,000. So these are the items which come in the liability side of your balance sheet. Now we'll see the asset side. Now if you see the asset side, first item is buildings. First item is buildings. The value of buildings is 2,80,000. Value of building is 2,80,000. Why I took in the inner column means you can find a depreciation on the building in the adjustment side. So already you calculated the depreciation on building in your profit and loss account. So same, that particular depreciation amount should be deducted from the building value. So building is 2,80,000 minus depreciation on building. So your depreciation on building amount is, that is 14,000. So from this 2,80,000 you will be deducting the 14,000. You will be getting a difference amount of 2,66,000. Net building value is 2,66,000. 2,80,000 minus depreciation on building 14,000. Same after buildings you will be writing furniture value. That is furniture. The value of furniture is 60,000 rupees. 60. Same in this case also you will be deducting depreciation on furniture. So depreciation on furniture is, that is 6,000 rupees. 60,000 into 10%, you got 6,000 rupees. From 60,000 you will be deducting 6,000. You will be getting an amount of 54,000. And the next item come in the balance sheet is you may find this particular debtors. This is very, very important. The value of debtors is 30,000. Value of debtors is 30,000. From this 30,000, you will be deducting the provision for doubtful debts which is given in the adjustments. Already we considered this provision for doubtful debts in the profit and loss account in the debit side, and other effect we will be doing in the asset side of the balance sheet. So from this particular debtors you will be deducting the provision for bad debts. So the provision for bad debts is 5%. Make a provision of 5%. So on 30%, 5% means you will be getting PBD. nothing but provision for bad debts, that is 1500. So from 30,000 you will be deducting 1500, you will be getting an amount of 28,500. And the other item come in the asset side of your balance sheet is closing stock, and already we discussed this closing stock you will be finding in the adjustment side, that is closing stock. So the value of closing stock is 35,000. Value of closing stock is 35,000. And other item which come in the asset side of your balance sheet is prepaid advertisement expenses. Already you calculated this particular prepaid advertisement expenses in the profit and loss account. Same we will be taking in the asset side, that is prepaid advertisement expenses. Prepaid advertisement expenses is 1250. Prepaid advertisement expenses is 1250. So these are the items which comes in the balance sheet. This is the asset side of the balance sheet. This is the liability side of the balance sheet. Now this both the sides, asset side and the liability side, should tally. First we will see the total of this liability side. If you see the total of the liability side, that is 2,71,750 plus 1,04,000 plus 8,000 plus 1,000, you will be getting a total of 3,84,750. 3,84,750. Now we will see the asset side also. 2,66,000 plus 54,000 plus 28,500 plus 35,000 plus 1,250. It will be the same amount, that is 3,84,750. Now this is a balance sheet of Mr. Arun Kumar as on 31st March 2008.
Subscribe to Account Finance with Ravi for finance and accounting insights.